Devil Wears Prada 2 has already grossed well over 250 million globally. Meryl Streep is back at Miranda Priestley, the most powerful woman in fashion. Ice cold, impeccably dressed, running Runway magazine with an iron fist. And in the film, she's in trouble. A brand she championed turns out to use sweatshop labor. The magazine's owner goes over her head, her credibility is at stake. Here's what the film doesn't tell you. That story isn't all fiction. The real company behind Vogue, behind Miranda Priestley, is Condé Nast. And the real Condé Nast has spent the last decade quietly selling off its buildings, laying off hundreds of staff, and scrambling to reinvent a business model that the internet destroyed. Today we are going to follow the money. How did Condé Nast build the most powerful fashion media empire in history? And how did that empire start to crack? To understand Condé Nast, you have to start with a story that is almost too on brand to be true. In 1959, a New York newspaper magnate named Samuel Newhouse was reportedly looking for an anniversary gift for his wife, Medici. She loved Vogue. So he reportedly bought her the company that owned it for $5 million. Not a subscription, not a framed cover, the company. That single decision, a billionaire buying a media empire as a gift, then subsequently folding it into his private holding company, which is Advanced Publications, shaped everything that followed. Advanced Publications today is worth many billions, with holdings spanning from Reddit, Charter Communications, to a portfolio of local newspapers. But Condé Nast has never traded publicly on its own. No stock price, no quarterly earning calls, no activist shareholders demanding the September issue to be cut from 700 pages to 400. The Newhouse family could run it the way they wanted, for as long as they wanted and at whatever cost they chose. It let Condé Nast invest in editorial quality that a public company would never have tolerated. Annie Leibovitz could spend 30 days lighting a single portrait. A Vogue fashion shoot could cost $100,000, and none of that had to be justified to a shareholder meeting. But that same privacy, as we will see, also meant that when the business model started to crack, nobody rang the alarm bell. There was no market price falling, no earnings miss, no analyst downgrade, just a slow, private deterioration. Before we can understand what went wrong, we need to understand what made this business extraordinary. Condé Nast didn't really sell magazines. It sold access to a very specific kind of reader. Wealthy, aspirational, and culturally influential, to the brands that wanted to reach them. The September issue of US Vogue is the single most important edition in magazine publishing. In its peak years, it ran over 700 pages. More than half of those pages were advertisements. A single full-page spread from a luxury house, Chanel, Dior, Louis Vuitton, could run well into six figures. Multiply that by hundreds of ad pages across Vogue, GQ, Vanity Fair, The New Yorker, Architectural Digest, Wired, and more, across American, British, French, Italian, and a dozen other editions, you start to see the scale. The business logic was elegant. Luxury brands don't advertise to sell products. They advertise to maintain positioning. A Chanel ad in Vogue isn't trying to get you to click buy now. It's communicating we belong here. We are Vogue adjacents. And that association, at scale and over decades, is what builds a luxury brand's pricing power. And Condé Nast understood this better than anyone. They didn't just sell advertising space. They sold editorial prestige. The implicit deal was advertise with us, and Miranda Priestley, or whoever the real-world equivalent was, might choose to feature your collection. She might not, but you need to be in the room. And that is the moat. Not the printing presses, not the subscriber list, not even the journalist. The moat was the cultural authority to decide what was fashionable. And that authority lived in Anna Wintour. Here's where the story gets interesting. Because the moat didn't disappear overnight. It was drained, slowly, and from two directions at once. In the 2000s and 2010s, digital advertising scaled up rapidly. Google and Meta built platforms that deliver targeted ads to a specific person at a specific moment with measurable results. A luxury brand could buy a Google ad, track whether the customer clicked, and know exactly what they paid per lead. A full-page Vogue ad offered none of that. It was expensive, unmeasurable, and reached anyone who happened to pick up the magazine. By the old logic, that was fine. You were buying the prestige, not the performance. But as CFOs at luxury houses started to scrutinize their marketing budgets more carefully, the unmeasurable began to feel uncomfortable. Printing advertising revenue at Condé Nast European operations fell year after year. The UK alone dropped from £93 million to £89 million in a single reporting year, and that was after years of prior decline. The second blow was more structural and more permanent. Luxury brands discovered they didn't really need Vogue to reach their audience anymore. An LVMH brand posting on Instagram could reach 40 million people at zero marginal cost. It controls the narrative entirely. No editor can decide not to feature the collection, and no journalist can write a single critical review. Think about what that did to the implicit deal. Remember, Condé Nast's value proposition was advertise with us and you'll be in the room where fashion authority is granted. What if the brand can grant its own authority through its own channels to its own audience? Who then pay for the intermediary? The honest answer is, for most brands now, at most price points, the answer is increasingly they don't. Condé Nast's response has been a genuine attempt at reinvention. Digital subscription stocks grew 100% in 2023. E-commerce affiliate revenue, where they make money when you click a link in an article and buy something, grew 39% in the same period. Events, including the Met Gala, which is essentially a Condé Nast production, grew 19%. But here's the watch point, and that's the same tension we see in every legacy media business trying to pivot. A 39% growth in affiliate revenue sounds impressive until you understand the base it's growing from. Affiliate commerce is a low-margin business built on volume and click-through rates. It's a fundamentally different and structurally weaker revenue model than commanding six figures for a single luxury spread. The growth numbers are real, but the question is whether they're growing fast enough to replace what was lost, and the evidence suggests not yet. Which brings us back to Miranda Priestley, and to the real question that sits underneath the financial story. Anna Wintour has run the US Vogue since 1988. She is now the global chief content officer for the entire Condé Nast portfolio. For almost 4 decades, she has been the single most powerful person in fashion media by any measure. Her power was never editorial in the simple sense. It was economical. A feature in Vogue could make a designer's career. Being cut from the front row of a show could signal the beginning of its end. Brands pay enormous sums to advertise in Vogue, not just because of the readers, but essentially the proximity to Anna Wintour's approval was itself a commercial asset. And here's the structural problem. That power was real, as long as Vogue was the arbiter of fashion authority. But authority is only worth something if it's scarce. If a brand can become globally desirable without appearing in the September issue, then the scarcity is gone. Wintour's power hasn't vanished. The Met Gala is still the most important night in fashion, and she still runs it. The Vogue brand still commands premium rates in the declining market. But the economic foundation underneath that cultural authority has been eroding for 15 years. And this is a pointed, uncomfortable version of the acts and assets question. What is the asset worth when the moat has been drained? And when the authority can no longer be monetized at the same rate? So where does Condé Nast actually stand? Let's be precise, because this is a part that tends to get lost in the cultural noise around fashion media. The company is not about to collapse. The Newhouse family's Advanced Publications is a privately held media conglomerate, and they have the financial depth to absorb continued losses at Condé Nast for years if they chose to. And the new revenue streams are real. Events, subscriptions, affiliate commerce, and licensing deals represent a genuine pivot. In the language of business analysis, this is the reinvention phase. The company has correctly diagnosed the problem, has leadership with the mandate to change the model, and has early proof points in the new direction. But here's also the watch point. It is the same one that faces every legacy media business attempting at this kind of transition. The new model requires volume that the old model never needed. A single luxury advertiser spending $5 million a year with Vogue can be replaced by 5 million people clicking affiliate links. If only those people exist, click consistently, and the commission rates hold. That's a fundamentally different operating challenge. It requires technology infrastructure, data analytics, and audience scale that print media companies were never built to develop. Condé Nast has the brand. Whether it has the operational capability for the transformation is the open question. The hundreds of job cuts in 2023, the folding of Pitchfork on the GQ, the sale of Vogue House, these are signs of a company that is restructuring seriously, and that is not the same as a company that's failing, but it's also not the same as a company that has found its next model. I want to end on a question that the financial story raises but doesn't answer. Vogue at its peak didn't just exist to sell advertising, it existed to tell the culture what was beautiful. That is an enormous amount of power for one single institution and one single person to hold. And it is a power backed by economics, because luxury brands need a Vogue, and Vogue could choose what to cover. The prestige was real. It was inseparable from the money. As the money weakens, so does the editorial authority. A Vogue that is dependent on affiliate clicks needs to write about products that people would actually click and buy. A Vogue that derives its prestige income from brand sponsorships of events is, in some sense, more beholden to those brands than the old advertising model ever was. The old Vogue could afford to be cruel to designers whose work it found mediocre, because it didn't need them as badly as they needed it. The new Vogue cannot as easily afford that independence, which raises the real cultural question. If the institution that declared what was fashionable no longer has the financial independence to make that declaration freely, who does? The brands themselves, the influencers, or the algorithm? The mode is straining, but what floats in to replace it will define the next chapter of fashion story. And that's Condé Nast. That's the real company behind Miranda Priestley. And that, I think, is a much more interesting story than anything in the film.